The GDP numbers just dropped, and it makes the economy look a lot better than you might think. Now, with that, I gotta say, not so fast, my friend, because if you take a peek underneath the hood, I will expose why the overall economy is not as good as it might seem following these GDP numbers. Now let's get into it, because Q2 GDP was revised higher to 3.3% and PCE increased to the revised lower of 2%. Now, with this, right, the measure compares to the 3.1 consensus estimates and a 0.5% decline in Q1. Now, the revision reflects upwards revisions to investment and consumer spending, which partially was offset by a downward revision in government spending. Now, of course, we had the government spending come in through the Doge, right? Elon came in and he's just slashing everything left and right. So we see the GDP drop dramatically. Now, we see consumer spending increasing. But what we saw in Q1 is the main reason why we're seeing the increase here. Because in Q1, we saw consumer spending fall dramatically. Everybody was saying, oh, they were preparing for these tariffs, the Trump's tariffs and everything. Seeing them rise so much just caused everyone to quit spending. And, everybody was just waiting for this economy to start increasing. And then Q2 came and Trump started implementing these tariffs, and consumers went and flocked trying to buy to front run the tariffs. So it's always been tariffs this, tariffs that. But the reality is changing these now shows a little interesting little wrinkle here, as the jobless claims now have fallen. And so because the jobless claims have fallen as well, we are seeing the upgrade, and everybody is thinking that the consumer is a little bit stronger because consumer spending is lifting that Q2 GDP past the initial estimates. But let's be honest here, right? When we see the Q2, we see the personal spending, investment is heavily down by 13.8%. Government consumption about even, and then imports dramatically increase. Obviously, these imports are widely because of the Trump's tariffs, and we're seeing everybody trying to front run them, or at least get their goods and services well before we see Trump and everybody increase like crazy. So what we're seeing is just the dramatic rise up in all of this, right? So this is going to be very interesting. We need to keep a close eye on what these numbers really are going to be tracking over time, because I've been tracking this heavily on this channel. And if you guys are subscribed, thank you so much for continuing to tune in. I know 95% of you guys watching this are not. So make sure you're smashing that subscribe button. But I am hitting on the housing market very frequently because of the wrinkles we're seeing here. So even though the GDP is increasing dramatically, home prices in the largest 20 cities fell by 0.3% month over month, their fourth consecutive monthly decline. This is the longest red streak since 2022 and the second longest in 13 years. Now, in 13 years, right, that was 2012. So we didn't get quite to 2008 just yet, but we're not that far off, unfortunately. So we got to keep a close eye on this as we start to see home prices and everything else. Really keep a close eye on it. I mean, we saw new home prices and home sales be at 30-year lows in July. So I wouldn't be surprised if we see this number when it comes out for July numbers start to come down as well. And I think that we're going to start to see, the year-over-year home price increase, the smallest gain since July 2023. Adjusted for inflation, the prices keep on declining, 0.6% and 2%. This marks the 13th or the weakest spring in 13 years since mortgage rates and prices have been reduced. So the housing market continues to soften. So we could continue to see this. And then the other interesting thing that we just saw the other day was Nvidia had a giant red candle. I mean, look at that thing. That thing is just falling off a cliff. I almost did the live stream strictly on this because of what we are seeing from Nvidia. But the red candle here, as it falls 5% after recording a monthly revenue of 46.7 billion. It beat both revenue and earnings per share, but everybody was front running thinking that it would be dramatically better. And a lot of things cited by about China in that earnings call caused that fall off the cliff. Get back here, right? What we're seeing, the U.S. economy growing faster pace in Q2 following this revision. It's leaving the first half of 2025 at a 1.4 annualized rate, right? So releasing the second estimate, and according to the BEA, the revision stemmed primarily from upward revision and investment in consumer spending that were partially offset by downward revisions to government spending, right? So the government's not spending as much, which we knew. And the U.S. economy only expanded a muted 1.4 average pace in the first half, revealing soft underlying private sector demand outside of the AI-driven investment boom. Now, everybody is blaming the Trump trade war for all of this, right? They're pointing the finger, saying that this revision, well, not so fast. We need to really keep a close eye on this and watch this carefully as to, is the trade war actually hurting things? Or is this just the scapegoat? Are people just really looking at the trade war as, hey, you know what? It's nothing that is positive. But the unique thing is that they all cite, hey, you know what? There's a rising stock market. And the stock market hit literally an all-time high today. The S&P 500 new all-time high, hitting 6,500 for the first time ever, folks. First time ever this happened. So with the S&P 500 hitting this all-time high, you would think, oh, you know what? Everything is fine. But everybody's saying, oh, the Trump's trade war, consumer spending's down. It's coming to your Etsy cart. The abrupt end of the de minimis tariff expectations have chaotic effects, right? These opinion pieces are just coming out saying, you know what? Spending is down. But if you look at the revisions here, I mean, the revisions are all saying consumer spending is back up. So the long story short of all of this is the GDP has increased. Housing markets and consumers are flip-flopping, where the housing market is now in an area where people are not necessarily spending just yet. And Nvidia is feeling the effects of these tariffs. Now, these tariffs in China, they keep getting referenced in these Nvidia earning calls. But, you know, everybody thinks, hey, you know what? The combination of this trade war, we just need to add liquidity to the market, right? But this 87% chance that we're going to cut interest rates here in the next 3 weeks-ish, you know, in my personal opinion, I think we shouldn't cut interest rates because I think we're already too far gone and, you know, the market's already pricing this in. So when we see these interest rates come through and, you know, everybody's looking at that, oh, you know what, these interest rates cuts are going to save the economy. I don't necessarily think that's the case. I mean, we're already seeing all-time highs from the S&P 500, right? We're already saw that. But what we are seeing is an extremely weak Dixie, extremely weak dollar. Everybody's flocking to get away from the dollar, right? So if you're trying to get away from the dollar and you see the S&P 500 doing okay. Well, what are you thinking, right? Real estate's doing poor, the stock market's doing really well, and the consumer keeps on spending. So this might be one of the more confusing market environments that we've seen because the market, quite frankly, just doesn't even know how to really react to what the hell is going on here, folks. So make sure you guys are hitting that subscribe button, hitting that like button, and do it with the bell notifications so you guys can come in and tell me your opinions of what is going on here. Because I'd love to hear you guys in the chat because we have retail investors also taking some profits, right? Because we saw individual investment go down significantly, right? So in these revisions of the data, investors are taking profits. They're getting away from it. Hedge funds sold at 2 billion. So we're seeing the ETFs dump in. So this is a very unique and timely, market that we're in, and we have to really just lock into what is going on here. And I'm going to be doing that. So make sure you're hitting that subscribe button, telling a friend to tell a friend, and I'll catch you guys all at the next one.